Today we're going to discuss business metrics that pertains to subcontractors and similar type of businesses. Now, every business has their unique challenge. Every industry has something that's specifically for them, and this is what we're going to address today. When it comes to business metrics or KPIs, KPIs stands for key performance indicators. There are several that is crucial, that is very important for you as a subcontractor. And let me explain to you some of them. After you finish that, I'll share my screen and I'll actually show it to you in real life how it's being done. Let's discuss sales for a second and then we'll go to job costing. With sales, it's always important that you have a steady pipeline of incoming new leads. Even if it's a busy season, let's say it's the peak summer and everyone is running after you, it's before your specific season for your specific niche and people are coming after you, you always have to focus on getting new business. Because we all know that although you're busy now, that might last forever. So you have to maintain a healthy sales channel. You have to maintain a healthy sales pipeline. Now, when it comes to sales, you should always keep track on what's going in, how many new leads did we get this week, this month, and so forth. Now, we discussed in the past the difference between lead and lag indicators. This pertains to sales as well. If you don't understand the difference between lead and lag, please watch the previous videos where we explain that in detail. When you're going to monitor your pipeline for new sales, you should really break them down in categories. For example, you can have a category for residential, commercial, service items, and so forth, other stuff that's unique to your specific business. Now that we got sales out of the way, let's discuss job costing. Job costing is crucial for a business like yours. You cannot simply rely on your income statement. We all know that the income statement is something that's very important for every business. You can see your income, your expense, everything is nice and tidy. But when it comes to a subcontractor or any similar business, it's impossible to rely on that. Why? There's a few reasons. First of all, your jobs doesn't run nicely beginning to the end of the month. Some jobs may take several months. Some jobs will take 2 months, 3 months, 4 months. Some job you do part now and part later and so forth. So it's impossible to rely on that alone. That's why you will need to create a good job costing report, job profitability report. Essentially, what you're really doing is an income statement for each job. And that's very important. When doing a job profitability report, you want to have your sales, which is your invoice amount. You want to have your material cost, and you want to make sure you have your labor cost. Those are the big components when it comes to job profitability. If you're using QuickBooks, QuickBooks does give you a job profitability report. However, there is a lot of information that you will not find by simply running the QuickBooks report. Again, I would say is that it's a nice start to use QuickBooks, but there's much more information that you will need in order to really understand what's going on. Now, what you want to make sure is, first of all, when you're accepting a new job, so you have an estimated profit margin, right? If you don't, you should make sure you work on that. So let's say you're a plumber, and you should know how much your material, your markup on material should be. You should know how much your labor cost should be. You should have a percentage, and you should always measure your actuals, meaning your actual job profitability against what you predicted, against your plan. When you gave an estimate, you probably relied on something, and you should compare it against that. You should compare your estimated hours compared to the actual hours. Why do you need that? You want to understand, because slowly but surely, the hours will creep up. So let's say you understand that this project typically takes 12 hours. All of a sudden, you'll see 15, 16, 18. Now, if you do that, you monitor that on a regular basis, you will start seeing that something is going wrong. I can't give you the answer now. The answer may always be different, right? The answer could be that one of your guys are not doing a proper job, right? It could be that the team are slacking. The manager is not overseeing them correctly. It could be that you estimated allocated on unreasonable amount of time. It may be they didn't estimate correctly. In that case, your invoice amount wasn't correct. The amount that you're billing your customer wasn't correct. So there's so many variables that could go wrong in a job. This is the reason why it's very important to review them on a regular basis after every job is done. You review the job, you compare them to what you predicted, to your estimate, to your projection. Next step, the other thing that you should do on a regular basis is from time to time, let's say once a month, you should actually review, you should sort the jobs. So let's say you'll do it in a spreadsheet. You should sort your jobs from most profitable to least profitable and try to understand what's going on. Why was this job more profitable? Why was this job less profitable? There could be a lot of reasons. It could be the crew, it could be the manager, it could be the weather conditions. But by analyzing it, by comparing the more profitable job to the less profitable job, you would know that you should focus on the jobs that are highly profitable versus to the unprofitable jobs. When reviewing the jobs, as I mentioned with sales, it would be helpful for you to break them down by relevant categories. For example, if you have a commercial division, residential division, it's probably best for you to split them out, commercial, residential, because you want to compare apples to apples. You can compare them by region, by type of work. There's a lot of different factors that's unique to you. Now I want to take a few minutes and I want to actually show you how this is actually looks like in real life. Let me share with you my screen and let's take a look. Let's jump right into it. This is the dashboard that we have. This is the dashboard that we're using with our subcontractor client. This is something that we're showing to them. I don't want you to get intimidated because you don't need this in order to do the business metrics that we discussed before. This is just a nice way that we like to present it to our clients, to our CFO clients in this field. However, this is something that you could do on your own on a simple spreadsheet. If you would like to get a spreadsheet simply listing these items, we can share that with you. Reach out to us and we would gladly share that with you. Now, if you take a look at the top left corner, that's a bird's eye view of new sales. What do we see there? That's just the sales component of your business. This is just showing you the new jobs, the new invoices, the new contracts that have been signed. You have the number, you have the volume. It's good to keep track of like what's going on with new jobs. It's nice to have that on your dashboard. Okay, moving on to the left. This is where we really want you to spend time and really try to understand what's going on there. So this is really where the trouble happens. What do you see over here? Completed jobs with less than projected profit margin. It gives you the worst jobs that you did in terms of profit. You understand that every store, every business owner has to be profitable. If you're retail shopping, you have items that you are selling at a loss or at a margin that doesn't make any sense, you will stop selling those items. The same rule should apply to you as a subcontractor. You should analyze every job and understand that that should be profitable. Over here, we're showing the jobs where you had the least amount of profit, and you really want to focus on that to really try to understand what happened there. So let's take the top line. We have 214 Lincoln Place. So you see completion date, the name of the manager, the type of the job. What was the amount of sale? That's the invoice amount. What is the amount of payroll? What were the material costs and what is the net profit? And we have, obviously we have the profit margin, and you compare that to your projected margin. So you'll see over here where you went wrong. Now that you see the jobs, we did the worst. Let's zoom into that. Let's get a little more information. Try to understand really what happened there. So if you go down to the center of the screen, what you'll see is a little more information. We have the start date, the completion date. So over here we added the start date. You can see the length of the job. And when it comes to hours to payroll, we actually have the estimated hours and the actual hours. We feel that this is very important for you to analyze because when you estimate a job, you're estimating roughly, you know the amount of hours that the job should take you. In some cases, we know that the hours weren't correct. Obviously, the actual hours doesn't tie out to the estimated hours. You want to analyze both, and you can see what's going on here. Some jobs you did worse, some jobs you did better than expected, and you want to make sure that you understand both of them. So we have the projected margin, we have the hours if it's better or worse, and we have the job length. So that should give you a better picture. That should tell you what happened. In this case, in this sample, we actually are doing that for the residential jobs as well. And then we have service calls. Now, what we did in the bottom is we also did jobs, total sales by salesman, and we have jobs by manager. So these are further information. Once you start tracking this information, it gives you a whole new level of insight beyond the simple report that you can pull from QuickBooks. We really think that this is important for you to analyze, to work on, and if it's helpful for you to get a spreadsheet to get started, we can share that with you. Thank you so much for watching and have a wonderful day.